the African Trade Insurance Agency. Celebrates 20 years. In the strategic shift of trade and investment in Africa. And so begins this 20-year journey.
In 1992, the World Bank posted me to the European Commission to work on regional integration in Africa. Two of the issues we came across was the high cost of trade financing, partly because of political risk, and the other one was the need to revamp the COMESA clearinghouse as economies liberalized and the idea of saving foreign exchange made no more sense. Combining the two ideas as part of the restructuring of the COMESA clearinghouse seemed a good idea, and the governor of the Central Bank of Uganda, who chaired the governors at the time for the clearinghouse, liked my ideas and asked the World Bank to send me to Zimbabwe to work on these issues.
So they came up with a scheme, a small scheme for these countries. And later on, when discussing, we found that those schemes were also suitable for the African continent. Because basically, all African states were facing the same problems. Whether it is Nigeria, South Africa, Uganda, small countries, big countries, there is a problem of Africa being perceived as a high-risk continent. It was a perception versus reality. When people in Africa first, this was a wrong perception, but it was a reality from the investor community. So we decided that we should find a way of bringing these instruments, which were completely inexistent in Africa.
Getting a name for ATI was a difficult one because people wanted us to call it COMESA trade insurance. We say no. The issue of perception of risk is an African one. It's not a COMESA one. It's not the East Africa one. And so that's why we call it the African trade insurances. Even the name insurance was a big problem because we didn't want to call it trade insurance. We wanted to call it Africa Investment Guarantee Facility. But there was opposition even from the World Bank and the rest because they thought we were competing with the MIGA. So there were many obstacles along the way. But finally, at least we succeeded in getting the name ATI, Africa Trade Insurance. And the name insurance is what we hang on to talk about political risk. And of course, later on, even adding the credit risk was not easy because they thought that is a space for other operators. So it was not easy, but I must look back with satisfaction because easy things, good things don't come by that easily. And my greatest joy is to see this institution, which had a very humble beginning, is now playing a role in the continent.
ATI would later become the foremost leading investment agency across the continent. But with new ambitions comes pondering doubts.
So the whole thing was a concept. First of all, it wasn't known in the original countries that established ATI. Secondly, investors, lenders, partners, didn't know this institution. It was a very, very new, venture as it was. And so there was a bit of doubt as to whether it would deliver. I think those are some of the initial thoughts, that ran into our minds, we who sort of were bold enough to pioneer, ATI. So there was lots of doubts as to whether, this thing would move. Actually, I would tell you that it took us 2 years to underwrite the first deal. And those 2 years were years of a lot of soul searching. where all the institutions that were involved in this, from COMESA to the World Bank, they sort of were asking themselves if we should go back to the drawing board, redesign the whole thing. I do recall that the first IDA loan that was given to ATI, about $5 million, as funds to sort of just set up and get the whole organization going, ran out within, I think, maybe a year or so. And then we had another $5 million, extended to us. That also ran out. And this institution wasn't just going anywhere in terms of fulfilling its mandate. So there's a lot of uncertainties. But I mean, it's fast track to 2021. It's almost unbelievable where we are.
Why has the African not transited from the primitive economy to a modern economy? So these are the challenges we have. And ATI is playing that catalytic role. And it's a world-class institution, rated by the rating agencies A and stable. And what else do you need?
There was an annual general meeting, I think in 2016. The head of state had to jet into Nairobi, carrying papers to get, his country, accepted at the AGM so that it can become a member. It can become a member of the ATI. So I can see that now ATI is a brand that is strong, and most of the countries now want to associate themselves with the ATI.
Over the last 2 decades, ATI has accomplished a lot by way of meeting the expectations of its founders. The number of African states benefiting from its trade and investment solutions has risen from 7 at the initial period, and it continues to grow exponentially.
ATI's growth trajectory is very strong. As can be seen, it started with a small number of member states in the COMESA region, and it has grown beyond this region and into West Africa and beyond. It has also attracted a number of very strong members, institution members, partners, strategic partners, outside even the continent.
Also, those from other regions joining ATI as members have also grown significantly. So ATI is seen as a very important Pan-African institution which is working for African solution.
Just seeing it as a really a global Pan-African institution, because as you know, ATI has 5 classes of shareholders. And currently, the one class of shareholder is really, we have more shareholders, that's the class A, the member states. And we're trying to introduce other shareholders who will sit in class B. These are non-African states, yeah? So for now, we have India.
By increasing the engagement of public and private entities, ATI is effectively embracing capacity building through its collaboration with DFIs, ECAs, and banks. That is a win-win strategy. Increasing the presence of private and public operators within ATI's shareholders adds a diversity of views, technical qualifications, and business experiences, which together all contribute to future innovation and excellence.
With every underwritten transaction being ESG goal-oriented, ATI aims at utilizing blended finance in order to ensure that environmental, social, and governance factors remain key for a future of sustainable development.
So in very lay terms, I always ask, my friends, imagine that you had to leave your country and do exactly what you do in your country in another country. So maybe you are a manufacturer, in the agro business, and you are told there's a huge opportunity to do exactly the same investment, but in another country. What are the first things that come to your mind? The first things that come to your mind is, I don't understand this market. And for that, you can do research and understand exactly what what the market looks like. But then you're also concerned about, when I cross, into another country, how will I take my money out? How will I be able to repatriate my dividends and the profits I make in this country? What if my investment is expropriated by the government or nationalized. I know this happened in country X in the 80s or 70s. What if it happened to me again and I lost my investment? What if there was a war, civil war? And it's that set of risks that ATI will step into, so we can actually take care of those risks for you. Anything in a cross-border transaction where you moved into a market that is not your natural jurisdiction, we will be able to provide you with protection for certain political risks or investment risks.
L'ACA apporte des solutions, mais pas seulement n'importe quelle solution, des solutions innovantes pour le développement de l'Afrique en termes de couverture d'assurance, que ce soit d'un point de vue l'assurance crédit ou l'assurance politique. L'ACA apporte des solutions. Et c'est ça dont le monde a besoin, et c'est de ça dont les pays africains ont besoin.
If we can't finance either the factories or the improvement of our resources to be able to sell at much better returns, then we have a problem. And the challenge is, while the rest of the world can actually go and borrow amongst themselves at say 2%, for Africa, even to get that money, so that investment, even at a high rate, is a challenge. First, because of the fear that the rest of the world has in terms of your ability to pay as Africa, but even the political issues that might arise and just make that ability to pay even worse. So I believe from now the ATI side, that's where we come in.
Aujourd'hui, nous avons pour objectif que toutes nos transactions puissent passer le filtre ESG. C'est vrai que nous n'en sommes pas entièrement là, mais nous allons donc montrer nos objectifs en la matière et comment est-ce que nous comptons atteindre ces objectifs-là, où est-ce que nous en sommes aujourd'hui.
En même temps, l'ACA sera pour l'Afrique le partenaire clé de financement de son développement. C'est-à-dire que nous partons aujourd'hui dans un environnement où il n'y a plus qu'une seule solution de financement. Nous parlons de plus en plus de blended finance. Donc, un projet donné peut être financé désormais avec l'apport de prêts concessionnels, avec contribution du budget de l'État, avec des prêts commerciaux, avec plusieurs types de solutions de prêts et de financement.
With an early focus on sustainable financing and development, ATI and its partners have come a long way in achieving those objectives and turning initial goals into operating standards.
So I think that the real work was done by the people who followed me. I think setting these things up is a sine qua non. You have to, or else it doesn't work. And I think that is it's such a prerequisite that it doesn't really and shouldn't get much of a hearing, because unless you do set it up, it can't work. But I think the real growth and the shift to profitability came after I left, because it had to get some physical weight behind it for it to be seen as something that people wanted to back. Many banks were nervous of it and thought, well, it's interesting, but it might be useful, but does it really solve a problem?
Part of the vision of the founders of ATI, was that there was an expectation that intra-African trade would be, key to the growth and development of the continent. Come 2021, January, AfCFTA came to be. Africans need to trade amongst themselves. There is no need for Africans to be exporting and importing raw materials, but we can value add in the continent. And we see ourselves, ATI, being the catalyst for that, to save the growing middle class, to save the disposable income that our people have. So if you look around, the developmental needs that we have is just a market ripe for development. So we believe that it's a good thing. I'm so excited that I joined it this time, because that's when the AfCFTA is actually coming to be, and we have the instruments to actually make it happen.
With an ever-strengthening capital base and a strong set of memberships across the continent, and of course we continue to engage more African sovereigns to become our members too. When we have that breadth of coverage and that diversity of staff, you're dealing with probably the most capable institution on the continent in terms of understanding the complexity of your transactions, but also the breadth of your concerns and the depth of what you want to achieve.
With an ever-growing number of national and international partners, ATI is positioned to enhance latitudes of coverage and simultaneously nourish trade and investment within Africa.
For us, the partnership with ATI is really crucial because ATI can do things that we, as a development bank, cannot do. As a key provider of risk insurance on the continent, ATI plays a crucial role in fostering trade and investment. And that is central to the Compact with Africa agenda that the German government is spearheading and that KfW Development Bank is working to implement with ATI and its other partners on the continent.
As a measure of our confidence, Sovereign and Chubb has become a shareholder and a proud member of the agency. ATI has been able to leverage its own resources by working with international financial institutions and reinsurers, allowing governments to better manage their debt, to obtain cheaper and longer tenor funding, and attract investments and trade into their countries. ATI's program generates sustainable growth, supporting private sector development, bringing social benefit and poverty reduction into their member countries. ATI has come a long way since it was founded. In the next 20 years, you can use this experience to craft creative solutions and mobilize new funding sources, allowing the continent to capitalize on its very dynamic environment and human capital.
In the next 20 years, I think it's perfectly possible to envisage every single African member state joining ATI. Indeed, ATI's membership's gone from 13 to around 20 countries in the last 4 years alone, so it's perfectly possible to envisage every one of Africa's 54 member states joining ATI. I think again it's possible to see ATI's portfolio growing from the current 6 billion region to something like $10 to $20 billion outstanding at any one time, and ATI becoming the critical institution that helps de-risk Africa for African development.
Deutsche Bank's relationship with ATI began in 2018 on the back of an innovative and bespoke insurance cover for a bilateral loan to a West African sovereign. Since then, we have been able to provide close to €1.5 billion in bilateral funding to sovereigns and sovereign-related entities in Africa in support of critical infrastructure investment and also debt reprofiling transactions. Our partnership with ATI has enabled us to further expand our business on the continent. The more global players and stakeholders become familiar with ATI, its role and product suite, the more the continent will be able to benefit from private sector funding to be covered by ATI. ATI is today an important DFI in Africa, an important partner to the private sector, playing even a more critical role as we look to the future.
I've known ATI all my underwriting life. They are our preferred partner in Africa. To me, ATI bring three key things to a deal: robustness, resilience, and recoverability. Robustness because they are staffed by talented, educated, knowledgeable people. They have strong, good leadership and an excellent ethos. Resilience. They operate in some often tricky environments, but ATI are always there through thick and thin, boom and bust, up and down. Recoverability, the third key ingredient, is vital to a political risk underwriter. And with ATI's preferred creditor status and their excellent contacts with member states, recoverability is built into the deal. Where do I see ATI over the next 20 years? Well, I can see them becoming a truly pan-African institution with every country and member state. And then they will deliver sustainable progress across Africa and beyond. Thank you, ATI.
AXA XL's strategic and long-term partnership with ATI is invaluable to our institution. Built upon years of mutual trust, transparency, and integrity. These vital ingredients have formed the backbone of ATI and AXA XL's strong and productive relationship, enabling us to support and provide successful, constructive, and mutually beneficial transactions for ATI's customers and their borrowers.
I would hope that in another 20 years' time,
every African state will be a member of ATI. In this way, ATI will have repaid the faith World Bank Group staff had in its creation, achieved its original mission, and acted as a beacon of hope and prosperity for the rest of the world, proving that when countries cooperate and work together, nothing is impossible.
All this to say that 20 years from now, I think ATI will keep on pioneering in Africa and in the industry with more creative solutions, supporting actors that are willing and ready for such innovation. 20 years from now, ATI will definitely become a benchmark for trade and investment insurance beyond Africa.
The African Trade Insurance Agency, the benchmark for trade and investment in Africa.